in the shelter in the morning as the sun is brightly gleaming. What is it all about? Just don't, I can't go back home. Lonely places, all the days I've gone alone, growing in the day.
Order rejected.
That things go back well. If you could only tell them how they're too real to understand. Many small suggestions, and then enforced through pressure long ago. Too many innocent faces, and too many far out places. Something's wrong. Let me tell you that something's wrong. It's been that way so long, and it's a shame. On the street car to the city where she knows that she may lose. We're just dead down, taking her own sweet time and knowing well this could be her final thought. That's the booty to the alley down the river, people pass by. Sits on the big gray rocks, takes off her boots and socks, not knowing what she will do next, just starts to cry. Many wild rejections, and then an angry questions from her dad. Too many TV dinners.
Good morning and happy Friday, everybody. We'll get started here in about 10 minutes. Just doing a little more prep.
In the shelter, in the morning as the sun is brightly gleaming. Heard her crying out, what is it all about? Can't go back home. Hell, I'm not just so low. I can't go back home. We live out in the open, travel all across this land, me and you. We'll end up hand in hand, somewhere down on the sand, just me and you. Just as free. Just as free. Till the city lights dissolve into a country sky, just me and you. Beyond the harvest moon, do all the things that lovers do, just me and you. Just as free. Just as free. No, we don't have no, we don't have no, no, we don't have no, no, we don't have no, we don't have no, we don't have a lot of money. No, we don't have a lot of money. Oh, so living now and traveling all across this land.
Order filled.
Thank you very much. This this next song was off the No Shoes, No Shirt, No Problems album. And we have never ever done this song live before, but tonight we thought it was only fitting because it sure does seem like y'all are keeping the island spirit alive tonight. Never hold that girl. She was born to see the world. All I got is a picture. She married me. After snow white sand, bag of seashells in her hand. Finally found paradise to see. On the coast somewhere beautiful, they let the Lord through her head. Sunlight dancing on the water. I wish I was there. Don't know how all about her. All I know is so far. She's on the coast somewhere beautiful. Running with my sometimes the sun goes down, shadows fall across this little town. I close my eyes and I drift away. Another place, another time. The world was ours and she was mine. I dream of holding her again someday. On the coast somewhere beautiful. And winds blow through her head. Sunlight dancing on the water. I wish I was there. Don't know how I heard. Go somewhere. Running with my heart. On the coast somewhere beautiful. Running with my heart. Good morning, gents. You trading from the plane again, huh? All right. Yeah, I think you have to get the Wi-Fi there, not just the free one, but the one you have to pay for. But good to see you, gents. Yeah. When I traded or when I traveled a lot, I also did a lot of watching the markets from the plane. Good to see you, Matt. Great to see everybody here. All right, we'll get started in 2 minutes. And bodies mimosa, and 2 cents later is what the radio plays on. And girls in bikinis right along the Malibu speed, and we ain't feeling guilty, 'cause that's the life we chose. All right, just about ready to get started here. Hope everybody's having a happy Friday so far. And that's where you found us. And there we go. Happy Friday, everybody. Wow, nice pullback on the markets. Keep in mind, a lot of this was on purpose and by design, okay? Government had to refinance about $9 trillion in debt. Okay, that refinancing, if we went in at the current rates, things would be a lot more expensive. Okay, so driving the dollar down, driving the dollar up. Okay, all of these can be mechanisms that cause the market to fluctuate a lot. But again, if we don't get the debt and the income coming in, because there is a lot more news out there about different countries already removing the tariffs. Okay, so that's income coming back in. Right now, we're just looking for the timing when the market is going to be bought up. So don't get caught up in, oh, the sky is falling. Okay, let's look at and see what we have happening. Okay. Couple of things, indexes may need to make a fresh accumulation of orders to move back up due to the percentage that the markets have moved down. We're in bear market territory, so a bear market rally is also imminent. Okay, so let's keep a close eye on that. As far as those rallies, I do want to point out that the metals markets, silver, copper, platinum. Okay, I'm going to take a quick look at those um, as we get started. Silver, I already took a micro silver contract. It's going against me just a little bit right now, but we are in that demand zone. Okay,
anticipating, that we're going to get a little bit of a relief rally here. Okay. Now keep your position small today, very small. Okay. So that you can handle the volatility and the potential move back up. Okay. Very important. Uh, Keep in mind, let's see, what else do we have? We had copper. Yeah, copper had come down to a zone, is starting to recover a little bit there. And I do want to take another look at platinum. Okay, platinum has just intersected with the demand zone. Very strong move back down. On these moves lower, anticipate the first bounce back up to be about a 23.6 retracement. And with the 23% retracement, we really want to see it get past the 38, okay, to actually see a reversal, okay? So you can see that there's going to be some significant places where we could get a bounce back up. Now, if it holds the 23% retracement after this move down, okay, then, the possibility of lower prices. But today we should be able to catch a pretty sizable bounce, kind of a little relief rally on some of the equity indexes. Crude oil, same camp. Okay. We had that death cross that happened a couple of days ago. Markets are going to come in and exploit that. I mean, this was a great example of that. We also saw that same death cross pattern. Right now, we're seeing it on the S&P daily chart, see it on the NASDAQ daily chart. Okay. If you go back historically and start looking at the equity indexes, when the 50 crosses the 200, often there is a strong bounce out of that. Okay. we have we had to go back almost to, well, actually, we did go back all the way to 2020 in some cases on the indexes and 2021 to find demand zones. Okay. So demand zones are that picture on the price chart. Now, when I have to go back that far to find them, okay, I want to wait for a fresh accumulation of orders to be built. Okay. If we drop down to the smaller time frames on the S&P, we can see that the accumulation is being built. We got a low pivot point in the middle. We got touches of resistance on the left, touches on the right. This is often a pretty good bullish pattern for a breakout. Anytime that we're looking at taking a breakout, we want to look over to the left and see what obstacles are in the way. Okay. The magenta line that we have up there, let's see if I can get it. I'm just trading one micro on this to stick with the volatility.
Order rejected.
And looks like I got to wait. Another thing to point out is the margin rates have changed quite a bit. Okay. Exchange margin rates for pre-market, after hours. And when the exchange adjusts their margin rates, that takes a lot of people out of the overnight trading. Okay. When the brokers adjust it, it also takes it. Now, a couple of the brokerage firms and even prop firms have restricted trading in the live accounts. Okay. So you have to remember right now that there's still potentially the potential for a large amount of volatility because of the fewer contracts being traded due to the margin rates being increased from the exchange and from the brokers. Okay. So even though we're trading with smaller contract size, we have to remember that there's fewer participants right now trading futures. Okay. So that volatility is going to be pretty crazy. The other thing to remember with futures, okay, is they always follow something. So monitoring the large market cap weighted stocks, and I just went and made some adjustments on these. looking at the percentage and the dollar amount that these have moved lower over the last uh, couple of weeks, this is markets are getting in bear market territory. Okay, bear market rallies or relief rally. Okay, those are always to be expected. They're tremendously volatile. Okay, so just keep that in the back of your mind. Uh, that volatility is there, and to choose your entries with smaller position size. There's a lot of upside here. So a small position size to let you ride through the ups and downs as price tries to get that rally going. Okay. Um, if you have a large position size or your normal size, often you'll get shaken out just by watching the P&L. So keep that in mind. Small position size, there's a lot of potential for it to move back up. As we look at the exchange traded funds, a lot of these are demonstrating, going out to the larger time frame now, exhaustion price moves. When we're looking at um, the gaps and types of gaps, we have to anticipate that the gaps that we're looking at are part of that exhaustion phase. Okay. That doesn't mean that the market is just done. Okay. The exhaustion phase is pretty volatile. Okay. The reason I'm sounding pretty strong on the bullish side, okay, is that we also see in the pre-market, let me bring this up here. Early in the pre-market, looking at the internals, and I'm looking at another resource over here, we had the trend above 2. Okay, very strong move. The highest point was about 4.5 in the pre-market. Okay, trend high, time to buy. VIX high, time to buy. We just went into one of the most extreme volatility on the volatility index. We just went into one of the more extreme levels that we haven't seen in probably a few years. Okay. So that extreme volatility, if you correlate these extreme volatilities and extreme complacency, you'll see that they line up with market tops and market bottoms. Okay. Now that doesn't mean there's a trade right now. Okay. And we got to keep that in mind. Not a trade at the moment, but the possibility of building an accumulation of orders to start a new move to the upside or price intersecting with demand right now. Okay. Um, trying to get a feel, heating oil took a very big drop, and along with crude oil. Okay. Now we're still seeing that the price is basing. There's no move up or move down right now. It's kind of just basing. The open range candle for that first 5-minute candle playing the open range breakout. Okay. Keep in mind that the Globex range is very wide relative to the daily ATR. The daily ATR is only $2. And we had a $6 move down, another 7% drop on crude oil. Okay. I mean, this is huge. I guess the drill baby drill scenario is, I mean, we're going to see gasoline prices come down pretty significant, which is a good deal. Okay. More money to the economy. Even though the markets are taking a big hit, these commodities and their adjustment is going to provide some relief to yeah, the folks that do use a lot of gasoline and heating oil and such. Okay. We're going to keep a close eye on this. I'm not looking at a bounce. This area is just support, right? This is our third touch. Okay, so we are expecting a bounce. And if you're going to look at trading that open range breakout, okay, it is a more aggressive trade. Um, keep in mind that the bull trap and the bear trap are in play with a wide Globex range. we look for the demand zone below the Globex low. We look for a supply zone above the Globex high. Okay. So you determine if the risk is valid for what you want to participate in. Okay. But I would be a little more inclined for the open range breakout above 62.40 for price to move back up. And we'd also be looking to the left. And let's go out to a larger time frame. Yeah, around that 60.48. And this is a continuous chart, large time frame. So $60.48, 60 and 59 and a quarter. So let's put that on our chart. Sorry, I gotta come back and find that 6048 5925. Yeah, so the bear trap, okay, just break if price breaks that Globex low, 60 50 59 46 in that area. Okay, so you decide which trade works best. I'm going to give this market a few moments to open up. Okay, we're going to have most likely a little panic at the open. Okay, and that's based off of what I'm looking at on these price charts, where we might see, we have multiple touches, low pivot point in the middle. Often this can lead to a pullback where we're going to be looking to test the lows again. Okay. Now, based on our trading plan, we should be looking at the kind of a higher low. But if we do come back down into that deeper into that zone, let's put some Fibonacci measurements on here. Now, overall, I'm pretty bullish right now, looking for that opportunity. Okay, with these extreme moves, we have extreme retracement. 70.7 and the 88.6% Fibonacci retracement levels are going to be that area right down in here on the S&P that I'm going to look for that potential double bottom picture. Okay. Yeah, I'm just going to make a few adjustments on this here. Okay, so a retest back down on the S&P. We're going to be looking for this to be an accumulation of orders. And if there's a lot of big banks and institutions coming in for this, it's going to take a little bit of time. Okay. Now, the equity indexes are an outside day, gapping down outside the prior day's trading range. Okay. That can often lead to more of a gap and run to the downside. That's what people would be expecting. Okay. Now we're expecting a little more move back to the downside, which might freak out a lot of people. People that brought money in to cover their margin calls yesterday after the big drop. Okay. Or from Liberation Day all the way down. Okay. They might not be able to cover again today, or maybe they can. Okay, but there's going to be a little panic here. People that were just right on that edge, well, they're going to get that call this morning. Okay. When everybody's looking and running the other direction, headlines, bears crying, they're trying to blame Trump and new administration on all of this change. Okay. The corruption that's being exposed is also being exposed in our capital markets. And it's pretty amazing to see that our capital markets are getting back to a fair value. Okay. They're not being propped up. Okay. They're not being bought up by the large market cap weighted stocks. Okay. Which basically on the S&P, there was 15 stocks that were basically controlling the whole market. Okay. This earnings season will be starting in about 10 days. We'll be right in the heart of earnings season. Okay. First 4 weeks of earnings season, we typically have the top 400 of the S&P 500 report earnings. Okay. There's a lot going on right here. Also with the refinancing of the national debt. And I think that the number is they had to refinance over 9 trillion. Okay. So a lot of this drama was an effort to drive down uh, the yield prices. Okay. So the trend right now above two, trend high, time to buy. This is NYSE stocks, okay, showing that there is buying coming into the market. That doesn't mean there's a trade right now, but it does show that there's more advancing issues over declining issues, more advancing volume over declining volume on the NYSE stocks. With that in mind, okay, somebody's buying into this. So if we do have a pullback as the market opens and shuffles around, okay, trying to find more buyers and sellers and such, okay, and we do need to come over here. Let's yeah, we have a huge gap down. Okay, so traders' sentiment at the market open is really bearish. Okay. Now, when traders' sentiment is very bearish like this, we're a huge gap down. Okay. NASDAQ pre-market indicator, which is the QMI. Okay. Somebody's going to step in and take the other side. Now, traders' sentiment, retail, mom and pop, I'm going to see the sky falling this morning. Another 4% drop. Tariffs, 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 like Liz was pointing out. Liz says, shall we take a sweepstake on how many times the word tariff is going to be mentioned in earnings calls and stuff? Or maybe companies will refrain from giving future guidance to massive uncertainty. All right. Historically, tariffs have been pretty financially good, okay, for the US, or sorry, for markets in general. Okay. We just had several big countries pull back their tariffs on US products. And just that amount alone from the countries that have not wanted to get into a trade war, they just said, hey, all right, reciprocal, we'll take them off and so on. Okay. So that has already brought back in the potential of bringing back in about 3 trillion in revenue just with what's come in so far. Okay. So amazing information out there, amazing times that we're watching a maneuver of how a big company now changes direction. Okay. So historically, this is an amazing time to see all the different maneuvers and things that are available to the people that know how to trade and manage these financial markets. Now, not all of it is rosy and easy. Okay. It can be pretty volatile for intraday traders like us. Okay. But we want to look outside the box right now. We want to be able to anticipate how is the public going to perceive the information that's being shared with them right now. Okay. Let's take and a lot of it, especially I want to repeat myself about the exchange increase their margin rate, the amount of collateral they want if you're trading overnight or intraday. That increase that happened, okay, prior to I'm not sure what's going on that increase in the margin rates was prior to the Liberation Day. Okay, markets were using their indicators to anticipate additional volatility. Okay, and they said, hey, the risk is too high for us. Let's increase our collateral that is needed. And with that increase, fewer participants were in the market. Okay. So be monitoring from the exchange when they reduce the collateral or the margin rates, then we'll start to see that, hey, things are changing. Okay. Now that doesn't happen intraday. Okay. Usually they'll tell you a couple of days before they start to do that. So go out to the exchange website and keep a close eye on those things. Okay. Now, with the potential rally back up, we might see that there's also a huge shift, and I think it's next week. Actually, let me look at the calendar. No, it's a little bit further out. Okay. There's a huge shift for the compensated crypto market. They're going to be putting that back in, okay, into the reserves. Okay. So a lot of dynamics going on here. We just have to be a very good student of this because this is historical, but it is something that we need to observe and watch how the market, big players start coming back into the market to get that rally back up. Okay. Now we did have an overnight zone on the Dow. Price hit that Globex low. Great shot out of that. Okay. We had several zones that price had tested on the NASDAQ and the S&P. We got that first bounce, but the fresh zone is now slightly below. Okay. All right. Yeah, we're going to have to drop down to smaller time frames to watch how and if accumulation is coming in. Okay. Well, keep in mind if you're trading feeder cattle, rollover has occurred. Okay. Now, in a perfect world, price makes a double bottom before changing, or it makes an inverse head and shoulders. Okay. So as we're watching this, the lows that we're looking at on a small time frame, markets change direction from the smallest time frame to the larger time frames. Okay. So if we go back and look at where we have a big uptrend, okay, it's going to be hard. We're going to have to go back. Okay, is we want to start seeing what is that picture when the trend reestablishes. We got the resistance, often a higher low. Okay, if that's a 70.7, you often have a very strong move to the upside. Watching these areas of accumulation of orders, we can find the timing for a breakout trade, price pulling back, making a higher low, and so on. We want to be observant of that because we're in that environment right now where the potential of a reversal pattern is being built. It doesn't mean I have a trade right now. Okay. Reversal patterns are often more volatile, back and forth, choppy, before we start a trend. Okay. Russell, pretty much the same thing. We do have prep screen zones that are lower. Okay. We're going to have to watch for the exchange traded funds near the open. Okay. Crude oil, quiet. Nat gas, finally getting that moved down. Boy, I wanted to short that this morning, but I had way too much to do in finding fresh zones. Okay. A lot of prep work ahead of this. Okay. But we are seeing that crude oil, natural gas is approaching some demand area. Okay. This is right after the last trade date. Okay, where the markets took off from it's a tested area. Looking a little lower for the bigger structure, we're looking down at 3.80. Okay. So always look left and find out where the leftover unfilled orders are at. And price is now retracing back down. And I'm expecting it to go deeper in that zone uh, from where the markets were buying from last trade date. Okay. Boy, so much going on here. Uh, New forecasted numbers based off of the 60-minute chart on gold, 3209, 3222, 3236. Okay. So to the upside, since we're at all-time highs, we use Fibonacci price extensions. We look for a confluence of about 3 swings in price, and I use that 50 simple moving average to help me find that. Okay. A couple other things. I want to bring up Goldman Sachs because this was just a picture perfect trade opportunity here. We had on a daily chart, we need to be looking at these big banks to see where they'll step in potentially to save themselves. Okay. Now, the zone, the structure, the way this is an accumulation of orders. Okay. When we look at our structures and patterns, we look for the details. Whether we're making a lower low helps us find where the location of the demand zone is at, where that extreme move is at. Okay. Now, price makes a lower low. Okay. So our demand zone entry would be in the lower 2/3 of our buy territory. Currently, at Goldman Sachs at 486, gapping down. There we go. Okay. And we're still looking for the banks to continue a little lower, 473. Okay. This is where we're going to expect some buying to come in. And a lot of these are because they're leftover orders, but also where some of the extreme hedging is at. Okay. Where they're going to support this market. So 473 on the Goldman Sachs. We'll keep an eye on that as the markets are now opened. Here we are. Okay. Now I'm going to put since we've had we're it's almost a 7% drop on nat gas. Okay. I'm going to do a 10 tick, do a trailing buy stop. Okay. So what this means is that I'm looking to be a buyer, but I don't want to be a buyer just yet. If it goes lower, I want to find that entry. Now, once filled, I'll go ahead and place my trailing stop on that. Okay. Back to crude oil. Nada. S&P. Okay. Now, pullback back down to be about on the S&P to 52.42. Okay. That would be a great place to look for an entry. Okay. I'm going to use that whole range right there. As we try to build this accumulation of orders. Okay. Bank index, big gap down. Okay. Stocks gapping down. okay, as they opened. And let's see if we're still holding the lows. Man, Meta, Meta, Amazon, amazing price. You may think that they're losing a lot of money, but they're often very heavily hedged to offset risk. All right, we just got natural gas. And I'm going to turn off the video for a moment because my charts are slowing down. Let's get our sell stop market in there. And I do have a trailing stop on this, okay? I'm just looking for a light volume. We had a light volume drop and we have a light volume potential move back to the upside, kind of a reaction. All right, back to S&P. Couple places we can look for the trade opportunity would be now at
Order filled.
the breakout. And or demand zone, okay? In Q. Very similar situation. Okay, we have a zone there, but more importantly to watch for this pullback is we're in some extreme market moves right now, okay? With these extreme market moves, a Fibonacci retracement level, and I just want to give credit where I learned a lot of these. Scott Carney, he's has his own website out there, harmonictrader.com. Okay. But I learned a lot of these different Fibonacci retracements that reoccur over and over again now. The 88.6 is pretty common when we're looking at double bottoms or double tops. Very often, the 88.6% retracement comes into play. Okay. But that's 70.7. And the 88.6, 78.6, they're really, and 70.7 are square roots of the 0.618034, which is the golden ratio. Let's kind of get the idea. Okay. 70.7 is common when we have some of these pretty volatile markets. Okay. So I do want to keep that on in perspective, which is bringing us down into this lower range. Okay. So price coming back down into this range. If we're making the upper range, okay. See, we had right at the top part of this was the 70.7. Let me just put that back on there. Now the 70.7% retracement is not common because it overshoots the 618 where a lot of traders anticipate, that's the common Fibonacci levels that people use. Wow, low single digit numbers. Look at that matrix go. That is just crazy stuff. Hopefully I'm keeping you guys on the sidelines, not engaging just yet. Notice some of my charts are being slow to update. And we're not the only ones experiencing that. But that 70.7 that we're pointing out, okay, and the price level that 70.7 is at is often seen in front of a very strong and long move to the upside. Okay. Just a slight higher low down to 88.6 is very common with the double bottom with just a slight higher swing low. 70.7 overshoots the 618, stops at the novice Fibonacci level traders, and then kind of tests that area twice. Okay, there's small moves, and then is in front of that retest is in front of a very long move back to the upside, which we're kind of expecting as far as a relief rally coming into the markets. Okay. So that area that we're first watching for about that, oh, let's take the noise off here. Right about that 17,943. Wow, 17,000. Weren't we at 20,000 a little bit earlier? Yeah, we've had some pretty. Yeah, the metals market's really taken it in the chin. I think that's a lot of manipulation. But they got to get prices down, make things look really bad, almost crash the market. So if they're going to refinance anything, all the prices will be lined up. Okay. All right. So we're waiting. Waiting. Oh, that gas got a little too tight with my whipsaw. So I did make 60 bucks off of that, but that whipsaw. So trailing stops can be a blessing and a curse. Okay. Especially when we're looking at volatile price movement. One of the big takeaways right now on that gas is that, hey, we had a zone mapped out. We had a picture of that zone. The zone was located in the right area. Okay. It was a piece of information just after the last trade date. Okay. Price rallied up, came back down. This is where the buyers held the price. The leg candle leaving that zone was bigger, so we expected price to retest and use this zone twice. Okay. Now, all these characteristics, okay, to take risk on a trade, you need to study the past price behavior. Why do we choose the levels and the zones we do and anticipate, forecast market turning points ahead of time is by using the information on the left-hand side of the chart, that picture that makes up a demand zone, okay, where the leftover unfilled orders are, and also a supply zone. This is why we place our order or place our zones and levels out there ahead of time to anticipate where the price will change direction. We can use that for taking profit. We can use that for entering a trade. All right, we're getting a double bottom here on gold. Okay, let's go back out to some of our other products that we were looking at. Yeah, it looks like copper has come deep into the zone. And silver also. So we're going to be looking for that bounce on gold so we can participate in a move on silver, copper, platinum. We did check out earlier. We're taking a lot of heat on this one. This is our silver. Okay. Let's go to platinum. Platinum is still deep into the zone. So we might look at that one as a confirmation price leaving that area. Okay. Now I do have a stop, and I'm quite confident we'll recover that drawdown a little bit later. Okay. All right. So we do have crude oil, 60.48. That's a bear trap. We have natural gas also on a large time frame where prices come back into that demand zone. And our FX markets have gotten pretty volatile too over the last couple of days, along with the 5, 10, 30-year bonds and notes going up because the yields have dropped below 4. Long time. Just a few months ago, the yields were up around 6. Okay. Around right before the election time. All right, we're getting close on the equity indexes. Okay, that first level, that's 70.7. We're looking for a little bit of a support. you can also identify that there is a leg base group of candles, whereas you can manage the risk on that trade. Okay. The risk is going to be wide and margin rates are increased, so fewer traders are going to be around these areas. I have already stipulated that reversal patterns are a lot more volatile, and that's what we're in. We're making a reversal pattern, seeing one develop. Okay. So the risk is elevated. As long as we manage that risk, okay, with a protective stop loss or a trailing stop, we'll be okay, but always manage that. Okay. Uh, we're right on the quarter hour, price dipping back into this area. And I'm going to start off with just one micro, see if my margin will allow me here. Give it just a second, 2 more minutes. Running away from me. Anybody else get that? Man, that would have been a great trade. Let's see, NASDAQ there yet? Nope, NASDAQ's not there. Okay, that's no, I'm okay to wait. Okay, so we're looking at NASDAQ down at 17,943 area for that 70.7. We'll look for a quick retest back down on the S&P, possibly right there about that 52.42 area. Starting to see the bank index getting a little bounce. Let's not forget. Okay, we got Fed Powell speaking at 11:25. Another Fed speaker at 12 p.m. and Fed speaker at 12:45. Okay. Kind of interesting the timing of when they all come out, isn't it? Wow, what a drop on the metals. Oof. All right, so we're just now it's when the patients come in. Okay. Oh man. Anybody stay in nat gas off of that move? Short-term target, if you did, I would be looking just above the open range candle, 3.997, kind of that first area where you have a leg base. Large time frame charts are starting to make that higher low. We just need a place for our entry. Dow's also making a reversal pattern. Okay, Russell. So we all know what reversal patterns look like. There's only a few of them, head and shoulders patterns or reversals, um, double tops, double bottoms, rounding tops, rounding bottoms, okay. Um, triple tops, triple bottoms. I mean, you got to know the difference between reversal patterns and continuation patterns, okay? When prices had such a dramatic price move, a fresh accumulation of orders must come into play, okay? We also want to document and get an idea that how far does price move away from that 50 moving average before getting a retrace back up? And that would probably be something to keep a close eye on at this point. Okay. Extreme moves. Okay. No difference in looking at an indicator or an oscillator. You're looking for those extreme moves. Wow, what a miss. It did test that. Is that the 70.7 or is that just a little bit lower? Yeah, I was a little chicken to just jump in on that. Nope, little lower. Okay. Haven't missed anything yet. Still making the reversal. It's a good move, but I haven't missed anything yet. Now, my guess is now that ahead of the Fed speaking, especially Jerome Powell coming out, we're going to see things a little more choppy as the uncertainty and everybody waiting on pins and needles for what he's going to say now. Okay. Are we looking at gold? Let's drop down to a smaller time frame. Oh, look at that. Went right into a leg base group of candles. Proximal line entry, deeper in the zone. Okay, so 5-minute chart has the picture. And notice this, the move up and the move back down. Those are things that we just covered yesterday in the or over the weekend in our Mastering the Charts Part 2 course. Okay. So we found some buyers down here. And I think the market is just waiting for Fed to speak. Okay. Whew. I feel better. It's coming back down for us. Hate that fear of missing out. Crude oil, waiting on that bear trap. See if there's any buyers down there. I'm going to put an alert. Okay, so I got an alert. So if crude oil gets close to that bear trap area, we'll look at heating oil as a lead indication and then look for that opportunity for the bear trap to come into play. Well, we gathered a lot of information out there. And as we have gathered that information, we have a good idea of what to anticipate for the rest of the session. Okay. But we have to find a way to apply a trade entry. Okay. We can have a lot of opportunities where we can call the market, see where the market's going. Okay, like as I'm looking at S&P, yeah, I want it to come down here. It's going to come down, find us some demand and change direction. Okay, that doesn't mean we have a place to enter the trade. One of the very big mistakes people make over and over and over again Okay. Hey, do we have any giveaways today for prop accounts? Okay. I don't know if we do. Do we have any codes? Okay. We have three $50,000 accounts, compliments of the Elite Trader funding. Okay. This would be a great time to get that account set up right now so you can participate in that. These are the evaluation accounts, and we do want to give a special shout out to EliteTraderFunding.com and one of the prop firms that is giving us some evaluation accounts free for us to share with you, all of you. So we have three $50,000 evaluation accounts. So what do we want to do for the first three people that reach out for that? What you guys come up with something, and then I'll post it out there. And the first three people that we get, we'll send them the codes so that you can start your prop account. Now, right now in these market conditions, a prop account is a lot less expensive than trading your personal account. Okay. Once you pass the evaluation, you start going into a funded simulated account where you get paid on that. With the Elite Trader funding, you get to keep the first 12,500. Even though it's a simulated account, you get to keep the first 12,500 that you make in that account after you pass the evaluation. Really good opportunity. Kind of that second job that almost mirrors the first job. Okay. So you guys come up with the hoops to jump through to get the first three of those, and I'll continue on with our analysis. What I was briefly explaining is that the market is now forming a fresh accumulation of orders. Okay. Trying to figure out where it's going to go. Is what most people are interpreting. Okay. But when we go out and look at some of the internals, look at where that trend is at. Boom, trend is high, time to buy. VIX is high, time to buy. Now the trend being this high, it's still forming this bar, takes about 15 to 20 minutes after you get to this extreme. This extreme move above this range implies that there's a lot of buying coming in. But the buying coming in on the stocks does not give us an entry just yet. Okay. But on the smaller time frame, especially watching the S&P, we can see that big banks and institutions are accumulating orders. They're creating that picture on the price chart. We're looking for about the next, let's see, 15, 30 minutes, 15, 20, okay, for price to come back down to a demand zone to complete. And right now they're gobbling up all the sell orders. Okay. Anybody that had margin calls and things like that, they're shuffling all of that out. Okay. And in that shuffle, we're seeing that this accumulation of orders is being built. Our internals show us that when we have this extreme fear, people are panicking and getting out. Okay. With the trend being high, and you look at the mathematics behind it, investopedia.com. Go out and look at the definition of what the trend is. Then apply it to how you would make a trade off of that information. What would you need to see on the price chart? There's also a lag for the futures, okay, because futures follow the cash market. The trend represents the cash market for the New York Stock Exchange composite, the stocks. And what we're seeing with that, as you break it down, is there more advancing volume over declining volume? There's more advancing stocks than declining stocks for this time period. Okay. So we're getting close. Okay. Once this candle completes, and I'm on a 30-minute chart here, once this candle completes, okay, you're going to start to see that it takes about 15 to 20 minutes for the equity indexes to finish their accumulation of orders and provide us an entry within that buy territory. Okay. Now we do have a planned entry either right around the 70.7 or that 88.6. Okay. We got price levels we're looking for, but the trend just peaked out. So we're still 15 minutes away from that. The price levels that we're looking for are represented and see, but with the Fibonacci levels. Oh, okay. That's a pretty easy hoop to jump through. On our YouTube channel, for those that are watching us on YouTube, if you are the first few that like and subscribe, okay, then the team will be reaching out to you to give you those codes to get your proprietary trading account, compliments of the EliteTraderFunding.com. Okay. So jump out, grab one of those accounts, get it set up today, and start trading that while the market uncertainty. You don't need to trade your personal money right now. If you're that good, get yourself qualified and get yourself a second source of income. Okay. All right. So what we're also is as you're watching this reversal pattern form, okay, we're seeing the next opportunity we have is at the breakout. We're right at 10 a.m. Eastern. We often have a little reversal, 85% of the time. The market changes direction around that 10 a.m. Okay. Now, don't worry if you miss this because these reversal patterns, what follows is a trending pattern. And when you start putting all the pieces together, you start off with a reversal, you go into a trending, and then you have a continuation. And 83% of the time after a continuation comes another reversal. These were the most difficult lessons for me to learn is how the map or how the transition of a trend changes. Okay. All right. So we're still waiting for price to pull back. 10 o'clock Eastern. No economic reports. Our next economic report is around 11 a.m., 11:30 a.m. Eastern. Okay. Now, other things to keep in mind as we're seeing such high readings on the trend and the VIX, big banks and institutions are trying to position themselves, and they're making it evident that they are, okay, especially from the trend readings, okay. We're looking for, oh, I forgot where I was going with that. Oh, what we have to keep in mind is that between 8 a.m. and 11 a.m., banks and institutions complete that order flow. Okay. So between 8 a.m. and 11 a.m., this is where we see demand zones and supply zones most easily that play out because of the banks and institutions involvement. Okay. So having a Fed speaker just after the banks and institutions have formed a bottoming pattern or reversal pattern, okay, as they've accumulated their orders, which we're identifying by having resistance and that buy territory being built. Within that buy territory, we are looking for where we have Fibonacci retracements that are very common with the reversal pattern, 70.7 or the 88.6, okay? Other traders might be looking at the 38, the 50, and the 618, which are often traps. Okay. We're looking for a Fibonacci level that also aligns with a leg base group of candles. which is where we have this yellow box that I'm identifying right there. That is the price range where we anticipate leftover orders to be. Now, it takes a tremendous amount of buy orders being down here to stop this move lower. Okay. What is evidence on the price chart is that this is where the sell tickets became zero and price changed direction. All right. Good job, team. Um, yeah, go ahead and get those uh, evals sent out so people can get signed up on that right away. Meta is inside. Yeah, let's go. All right, thanks, Matt. Let's go look at that. I mean, we got time. We're still waiting for price to come back down. Okay. Let's go out and take a look at that. Oh my gosh, look at Goldman Sachs. We're about ready to make that turn. What do you think, Matt? Goldman Sachs daily chart. Okay. Now the potential bounce off of this when we use that is if we take the trade long, we'll be looking for a bounce back up to about 580 and 687. Okay. That's a huge, huge move. Okay. We have smaller risk as price comes down, 473.56. Everything's on sale, literally. Okay. All right. So I do want to participate in that. I'm going to set that trade up. A small amount. I'll do just maybe 100 shares. Okay. Goldman Sachs, limit order 100. Okay. Buy limit. The price I want to buy it 473.21. Okay, and we'll look for that opportunity as price comes in. That'll be a great example. Now, Matt pointed out in our chat, Meta, M-E-T-A. Let's walk through the process. Oh, beautiful. Thank you, Matt. Meta's already there. We have our resistance level. We have that leg base group of candles. What I'm describing right now is the picture on the price chart where we see a fresh accumulation of orders. Okay. What happened right here, price gapped up, took out the resistance, the sellers, leaving this footprint back here that is very common. And since we made a higher low, it's going to be in the upper 2/3 of this range. We had a gap out of this area. Okay. We have relatively low risk on this trade. This picture and price returning here also implies that there's some leftover unfilled order. This is where the banks and institutions were just waiting for that corrective move. Okay. Now, suggestion to minimize risk is to drop down to a smaller time frame and look inside this area to help you manage your risk. Okay. Now, right now on a 20-minute chart to jump in, okay, price pulling back just a little bit. Let's drop down to even a smaller time frame. Price will start turning out of this from the smallest time frame to the bigger one. All right. I've already gone all the way down to a 1-minute chart, and we're going to look at taking a couple of shares right around that 509. We'll use the, as we get that pullback. Remember, we saw the trend high, okay? And we're looking for those that accumulation of orders here, okay? Yeah, we'll stick with 100 shares and limit. All right. And let's go back out to our daily chart. Okay. Now my stop loss, I'm going to keep at the distal line because we're looking at still some more volatility. What time is it? All right, price coming back for us. All right, got trades on Meta and Goldman Sachs. Excellent. Now, why is it important to look at the large market cap weighted stocks? Well, S&P, NASDAQ, and the Russell are all large market cap weighted indexes. The large market cap stocks move the index more than the smaller market cap. Okay. Amazon hit that demand zone 166, 161 and got a beautiful move out of it. And we don't have any other demand zones on the other. So when you don't have a demand zone that price is dropping into, okay, when you don't have a demand zone price is dropping into, reduce the time frame down to a small time frame and look for that reversal path. Okay. As Matt pointed out in the chat, yeah, he's looking for confirmation. Okay, that the buyers are stepping in. Okay. I'm anticipating those buyers to start showing their hand here in about 10 minutes. Okay. As we get closer back down here. Now, keep in mind the picture on the price chart is what we're looking at. Why is the picture so important? The picture trains the eyes what to look for. When we go back in history and we start looking at charts, okay, charts that have had very high or had very much a desired price move, a trade you wanted to take. When you look over to the left side of the chart, you see that there's very common patterns, very specific candle patterns that you can identify by adjusting the time frame up or down. And that's the picture that we're watching right now. This is a reversal pattern. Price leaves it and then comes back down to find those buy orders. Well, we're right at 10. Okay. The other thing to keep in mind when you're trading demand zones and supply zones is when price arrives in that demand zone. Okay. Between 8 a.m. and 11 a.m., that institutional order flow comes into play. And with that, we look for price to arrive in a demand zone or a supply zone on the quarter hour. Right now, we're coming in a little bit early. Let me find, oh, there it is right in there.
Order filled.
Okay. So I have my leg-based group of candles that I'm watching for. We're also matching up with Fibonacci retracement areas.
Order filled.
And we're still a little bit early. We just got Goldman Sachs and we got Meta. Okay. Okay. We're right at that 70.7%. Okay. So a little dip down into the demand zone. Okay. A little lower around in the next 3 minutes. We'll look to take the trade long, especially if it closes back above that 70.7. Okay. Now, if you've never experienced somebody leading you right into and walking you through trades, we do this on a day-to-day basis, either in our community trading room, okay, or in our live trading room and our live stream. So as we look at supply and demand, these are areas where we have the lowest risk, highest profit potential, and high probability of a trade working out in our favor. Okay. We're still 3 minutes early. Let's see if we can get a little bit of a bounce off of this. Okay. See, I don't want price to enter into my zone until the quarter hour. Okay. We look for them to happen right on the quarter hour. 17,925. Okay. Looking for that bounce. The order is placed out there ahead of time. And we're anticipating as the market does pull back that this is going to be a place where we want to take a long, whereas we can manage our risk. We want to see that happen in the next couple of minutes here. And my data is acting a little slow. I'm going to turn off the video again, kind of save on some resources. I'm on S&P almost right on time here. Finger on the market order, quarter hour. Here we go. Drop.
Order rejected.
Too many contracts out there.
Order rejected.
Boy, the margin rate must be crazy. All right, come on. Anybody else having restrictions on their trading account?
Filled.
Order rejected.
Well, looks like I don't have enough to trade that right now, but we've got I can put an arrow where I want to take a trade. Why did it let me trade the NASDAQ, but not?
Order filled.
MNQ just hit the 70.7, getting a strong move off of that. All right, just make sure your stops are in place and you're managing your risk on your trade according to your trade plan. Okay. A little bit later on, you may be able to enter at the breakout as another trade opportunity. All right, Amazon coming back pretty strong. So is Microsoft. Anybody take any of the trades off of these? Beautiful double bottom, higher swing low. We have these light volume areas where price drop. We're looking for price to retrace those levels. All right, the last time we checked the trend, oh, it was still up there, okay? So bigger players are stepping in to buy up the market, okay? But there's a lot of sell orders coming in on top of them, okay? Using these indications can help you, okay? Because there's still traders trying to get out of trades, okay? And that may happen for the next 40 minutes until the 11 a.m. Eastern, okay? Boy, it bounced right off at 70.7. So far, looking pretty good on that. S&P. Starting to see a change in the stocks. And we watching that bank index. Bank index getting back above the moving average, be a little more bullish. And as we're seeing the stocks move up, we'll see that the equity indexes will move up with them. What's crude doing? Has not arrived at our bear trap yet. Wow, gold. Ooh. All right, let's look at that large time frame demand zone on gold. 3,054, 3,057. Make sure you take a note of the picture on the price chart. Okay. This is the picture that represents the where they were accumulating at this price level. They didn't get all their orders filled, so they're waiting for price to return to that level. Where's our gold?
Filled.
Okay, Goldman Sachs making that picture perfect trade setup. Risk is still quite large, okay? So size your position according to your trade plan. Okay, we're about 6 minutes away from the bottom of the hour. You just joining us, Miss Chris? Yeah, that gas is right on the daily 50 moving average too. Caught a little bounce off of that little zone right there. Um, had a trailing stop on it. As I do with a lot of things right now, trailing stops are going to keep me safe while the market is pretty volatile. Ah, took the open range breakout on the crude oil. Looking for that bear trap. In Q. Notice it's holding at 70.7. I'd love to see a test just down here one more time. That is 927, 928. Okay, I'm gonna look to take this trade back up if it'll allow me. Now, the bank index, the BKX up here, when it's above the moving average, tends to be a little more bullish for going long. Okay. Um, we want to watch what the bank index is doing as an odds enhancer. Okay. Whether the bank index is bullish, whether it's bearish, and I'm using a small time frame and a moving average to help me determine that. Okay. I've been using this the last for a little while right now, And when I have price arriving in a zone, okay, and the bank index is bullish as the NVIDIA and Apple, two largest market cap weighted stocks on the S&P and the Dow, okay, and the NASDAQ, is we're looking for all three to be moving up or moving down to help us assess the risk, okay? Now prices come down, we're still looking at that 88.6. And as we assess the risk, price is getting very low back down to where the buyers stepped in this morning in the pre-market, okay? So this is becoming an area that if I'm going to take risk on a trade, I want to make sure that I have minimal risk, okay? Because based on our higher time frame, okay, price is bouncing off of this area. This is the second time it's been here. Price going through and breaking the Globex low is going to be looking for 5,082 for that next opportunity, okay? And I got small time frame here. Okay, let's go back out to NASDAQ. NASDAQ, if it goes deeper into that zone, we have a prep screen zone. Jot down the numbers. Okay. Dow, still building that accumulation of orders. And we've went deep into an overnight zone. Prep screen zone is just a little bit lower. The moving average on the BKX is a 5-period moving average, I believe. Let me just double check. 5 or an 8. It's an 8.
Order filled.
All right, we got our zone. Ooh, 1 minute early, so I have to take a little heat on this. Stocks are still looking kind of bearish. And there's the quarter hour, and boom. All right, well, we have come to the end of our live trading room, and we finally got our entry on the NQ. And I'm going to come back in and place a trailing sell stop on that as we look for this initial bounce. After a reversal pattern and the breakout comes a trending pattern, okay?
Order filled.
So it took most of the morning here for us to get into or wait for the accumulation from the banks and institutions, okay, to get into that trade, okay? I'm not sure the patience of Job, but we know what the right picture looks like and how to manage our risk, okay? So we're going to wrap up this with our live stream here. Make sure you're managing risk today. The price swings are pretty
Order
volatile,
filled.
okay? Be careful, and we'll see you over in the Discord room. Have a great Friday, and trade carefully today. Have a great day, everybody. Thank you for joining us.